Hey, what's going on, everybody? Max here with BB, and today for 10 Minutes Max, we're going to be talking about Ethereum, ETHBTC, the Bitcoin cycle as it's playing out so far, looking at a whole bunch of pair charts and trying to figure out where some of our beta is relative to Bitcoin, Ethereum, and the broader cycle that we find ourselves within. So I guess you could say we're going to do a mix of high time frame and then low time frame analysis today. This is probably going to be a longer video. I'm going to talk about some of the things I'm worried about, some of the things that I am not worried about and I'm very excited about, and really try to map out where we are within it, right? It's almost like we're inside of a house and we're trying to look at the shape of the ceiling and the layout of the home and then draw a picture of the outside. And that's kind of what we're attempting to do here today. Let's not waste any more time. I'm waffling already, so let's get into it. So the first chart that I want to talk to you guys about today is ETHBTC. All right, now this is probably a chart that you guys are familiar with, not just the ticker, but like you've probably seen these green, blue, and purple labels before. I made this chart initially, I think probably like over here, probably in like July, maybe like somewhere in the middle of 2024. And I was talking to you guys about, look, there is seasonality that tends to play out with crypto, right? And the longer you've been in crypto, almost the more spooky the seasonality gets. It's not just like the months and the quarters, but it's also the timing of things, like how long a cycle is. Things will top on the, exact same day that they did 4 years ago or something like that. It can be a little bit spooky, but nonetheless, if you can really kind of sift through all the noise, it can typically be pretty solid for high time frame positioning. Now, with that said, this cycle has been a little bit different. So we need to go up here, modify this chart and these drawings a little bit. The haters of me and BB will say, you are once again moving the goalpost. And to you, I say, you are correct, Mr. Hater. You are correct. I am moving the goalpost slightly. Now, here's the thing about moving the goalpost. When you are presented with new data, when you are presented with catalysts that fall, way outside the norm of reasonable expectations, sometimes things get delayed or expedited, right? And that's just trading and investing. But just because something doesn't happen perfectly on schedule doesn't mean that it won't happen, okay? So I guess shout out to my haters. You guys were right. I was wrong. But you had me in the first half. I'm going to get you in the second half. So let's dive in and kind of let me just give a comprehensive summary of what we're looking at here first, okay? First things first here, guys. This is ETH against Bitcoin, okay? So ETH divided by Bitcoin. When this chart is moving up, that means that Ethereum is a better hold than Bitcoin. It is outperforming, okay? When this chart is moving down like it had for about 3 years straight, that means Bitcoin is a better hold than Ethereum, okay? Now, there's something really interesting, ignoring the more recent price action. In the previous two cycles, first looking at 2016, 2017, 2018 cycle, we saw a Q4 bleed into a Q1 rally into a Q2 blow off. We saw the same thing over here last cycle, Q4 bleed, Q1 little bit of a pump, right? We're now off the floor, looking good. And then Q2 blow off. And, we did end up kind of extending and performing pretty well out here, but didn't really make a material new high. It was more of just a range last cycle, okay? Now, this cycle, we were kind of right on track as well, doing what we had done in the previous two cycles. We saw a Q4 bleed, but then something horrific happened, guys. Something quite horrific happened. We saw a Q1 nuke, right? Now, what happened over here? Well, let's actually pull up. Let's pull up the S&P 500, all right? So we're going to pull up the S&P 500 here, okay? So as you guys know, crypto has never been more tied to, legacy markets than it is now. And what we saw over here in Q1 was a horrific drop, one of the worst drops we've seen in terms of like how fast it happened, at least in recent years. You know, Trump's tariffs kind of spooked the market, kind of caught the market offsides a little bit. What we saw over here in Q1 was, you know, a 21% correction for the S&P 500. I'm rounding a little bit, but you know, you understand what I'm saying. So global markets sold off. This was not just, you know, like one index. This was everything. This was European markets. This was Asian markets. This was US markets, certainly crypto markets, right? So we had kind of a, I don't want to say like a black swan, right? But we had a set of price action in global markets that fell well outside the norm, right? This is not something that you can prepare for. Like, this is not just one company. This is the entire, like, this is a basket, the S&P 500, okay? And the proof of that is in a chart like this. Here, we can come back to this one. I'll just show you the VIX, right? The VIX spiked all the way to 60. All right. It spiked all the way to 60, right? So let's take a look at when the last few times we've had a spike like this happened. There's been a handful. The VIX is when you get a volatility blowout, basically meaning like you get a huge, it's got a negative correlation with asset prices, with the indexes. So like when the VIX spikes, you see a vol blowout, you see a huge positional unwind of longs, you know, and basically you get a huge correction. This was COVID, okay? This was when the global economy literally shut down. The VIX spiked to 85, okay? Like, this right here was the great financial crisis. I can go even back further. This one had a wick to 95, but kind of really settled around 80. So we had a scare here recently that was in line, not quite as bad, but in line with what happened over here in 2020 when, you know, the global economy shut down. I'll go to the higher time frame so we can see it. So this right here was COVID. This right here was the great financial crisis. And all these were kind of little scares in between. There's only been 1, 2, 3, 4, 5, and then I guess kind of 6, 7. In the past, this goes all the way back to 2008. So going back to 2008, well over a decade, almost 2 decades, we've only had less than 10 instances of scares this bad. And even more specifically, because these little ones over here, they're not little ones. They didn't even get up, you know. If we want to be really specific about the degree of fear that hit financial markets, going back to 2008, there was only 1, 2, 3, 4. 4 instances, including the one we just had in Q1, of a fear and a positional unwind and a vol blowout like we just saw. So I'm just trying to, before we really dive into it, we need to set the stage a little bit, right? What really happened over here? Yeah, it was a horrific, horrific scare. Global markets, like, really, they jumped off of a cliff, right? So that was what happened in Q1. So does that derail the entire thesis of ETHBTC? No, it's just like you have to move the goalpost and adjust when presented with new data, because I just showed you we had a horrific scare. So join me in moving the goalpost a little bit. Let's make some adjustments. And I think that they're fair adjustments to make. All right. So let's start with this. Q4 sell off, Q1 move up, Q2 blow off. We were set back about a quarter. So let's move the goalpost back 1 quarter, okay? Let's shift. So we're going to move these a little bit. Okay, so let's do this here. We are going to take this one, Q2, we're going to move it over a little bit here. Q1, we're going to move it over here, and we're going to make a new box, okay? So now we need to start Q1. So let's actually go right here, and we'll just put this one in like red or something because of the degree of the sell-off, right? So basically what we're doing, where I'm going with this is like we kind of missed a quarter. We got pushed back 90 days. because of what happened in Q1. All right. So let's put this in red. Okay. And then Q2, which was normally kind of Q1, would be like right here. So starts April, May, and then goes through June. Perfect. And then this one over here, Q2, now will be Q3. Starts end of June, July, goes through, or July, August, September, goes through September, which would be right here, right? So it's pretty good, close enough, okay? Now, if we look at it like this, and we make these minor adjustments, and we say, okay, this was, we'll just call this delay right here. We'll make this small, okay? So here's delay. And we will center that. I think we can make that a little bigger so hopefully you guys can see it. Okay. If we look at it like this and we say, all right, we really are doing what we've done in previous cycles, but we had a pretty clear and obvious delay that was catalyzed by the tariffs in Q1. Now we can make a minor adjustment and say Q1, which is really in like Q2. Okay, so we'll kind of push this back a little bit. Normally blue would be Q1, but this time around it's Q2. And this Q2 is now pushed back to Q3. But this leaves us more or less on track with these adjustments, right? So let's go through them again here. Q4 sell-off. Q1 starts moving up. Q2, we get blow off and arguably continuation into Q3, Q4, right? Then you just kind of range a little bit, but still get good performance. Last cycle, Q4 sell off. Q1, we start moving up. Q2, blow off, and then you still get good performance, but you don't really make like material new highs. Kind of same over here, right? You just kind of range. All right, let's look at this time around. Q4 sell off. And then we had the Q1 delay because of the tariff fear, right? Kind of black swan. It's an overused term, so, cut me some slack. But I showed you the VIX. I showed you the S&P 500, like, pretty crazy sell-off, right? Q4 sell-off, Q1 delay in red. We start moving up a little bit in Q2, which is normally kind of Q1, our blue zone. And then over here, Q3, which is normally Q2, we start moving up more aggressively. So I think there's a case to be made, and you could maybe even make the argument that the delay is longer than just Q1. It was really Q1 and Q2, right? So we could also maybe do something like this and, extend this over here and do something like this, because we really just started moving up, right? So we could maybe say, this delay was Q1 and Q2, and then this one would really be like 2 months back, right? And we just are in the blue now, about to go into the purple, and the purple will happen in Q4, right? So I think you have to contextualize it and give yourself a little bit of wiggle room because of what happened in Q1. So we got pushed back at least 1 quarter, but maybe 2. So I think that may, in fact, buy the cycle some time, okay? Now, we're going to talk about Bitcoin as well, like from a cyclical perspective, and talk about expectations. And then we're going to get into like the meme coins, the beta, things like that, okay? But this is really when you should start to see, beta outperform. And just real quick while we're here, because I have some more charts that are more specific to like Doge and Pepe and things like that, right? Let's just throw up something like Doge down here. So here's Doge down here. I'll just quickly do it because I want to keep it moving because we are really spending a lot of time on this video. This could be one of the longer ones yet. You can see pretty clearly that Doge really starts rallying somewhere in the blue and the purple. Doge hasn't really started rallying yet. It looks decent. Okay, it looks fine. But like the real blow off and memes happen somewhere towards the end of the blue into the purple, right? So that's kind of giving some more credence and validation to this idea of we are like at least a quarter and maybe two behind because of what happened in Q1, right? So anyways, let's keep it moving. Let's actually jump over to a Bitcoin cycles chart first. And we're going to do this together, and then we're going to get a little bit more specific with the meme coins, okay? So kind of working off that same idea, let's take some fractals from the bear market bottom all the way through the cycle top. So let's start with 2016, 2017. So let's draw a fractal from the bear market low all the way to the cycle peak, okay? So here we go, and I'll put this in blue, okay? Now let's drag it all the way over, because what we're trying to do right now is figure out, okay, is this cycle that different from a timing perspective? Or is it really different? Okay, so this was 2016, 2017. The black is the current price. And now let's go map out last cycle. And we'll put it in purple. So bear market bottom was here. Cycle top was in right here. We'll make the proper adjustment so that it fits perfectly. Put it in purple. And let's drag it all the way over. Okay, so bear market bottom to cycle top. Now, one thing that I find unbelievable is that the 2016 and 17 cycle was basically the same as the cycle after, right? Or maybe I just said that backwards. You understand what I'm saying? The previous two cycles were the exact same amount of time, within like a week of each other. It's not perfect, but you get it. It's like bear market bottom to cycle top. Both were basically the same. So when I look at this, I say, okay, if this cycle from a cyclical timing perspective is the exact same as the previous two, that would mean that Bitcoin's top is going to be in sometime in October. It's September 1 right now. However, we were just looking at the ETHBTC chart and talking about how we really got pushed back like at least a quarter, but maybe two. Okay. So a quarter is 3 months. So 30, 60, 90 days. So I think it's a fair assumption. And I think it's fair to expect that Bitcoin may be in for a slightly longer cycle as well, saying that this cycle really up until Q1, which was like right around in here, right? When we had that sell off from, the tariff fears and all that stuff. Up until about here, we really have been on schedule. Like looking at the cycle, we kind of were in between the previous two, and then we got a little bit out in front of our skis, came back, met them perfectly. We're ramping right in between. We got delayed here. Just like the ETHBTC chart, we got delayed a little bit here. So I also think it's fair to assume that maybe Bitcoin is going to be in for a little bit of a longer cycle, just because the cycle hasn't been that different so far. Clearly, you can see there's been little, like we made a new all-time high before the halving, but then kind of, synced back up. I think it's fair to say that maybe we could get a prolonged cycle, right? So normally we would top in October if this is the same as every other cycle. Let's maybe just kick it out. Here would be an extra quarter. Here would be, 90 days right here. So this would be an extra quarter. And if it's an extra 2 quarters, then it would be somewhere out in here. I need to draw this out. Oh, wait, that's 90 bars, not days. So this would be an extra quarter, and this would be an extra 2 quarters, right? So either if we are delayed a little bit, we could potentially come out into here, or maybe even out into, let's just say, end of March, right? Something like this. So if we really are delayed because of what happened over here, I think it's reasonable to suggest that maybe this cycle is not different. We just get kicked back a quarter or two, right? So I think maybe there's reason to be cautious around here and say, you know what? I know from a cyclical timing perspective, if this cycle is the same length as previous, we should top somewhere in Q4. But also, I think since we went over ETHBTC and we talked about, how this cycle did differ in a way, because typically Q1 is bullish and it was very bearish this time around. And we had kind of a black swan, but again, overused term. I think it's reasonable to suggest that maybe, just maybe, we could get pushed back a little bit. So maybe instead of a Q4 top for Bitcoin, you get a Q1 or Q2 top early next year, right? So just wanted to kind of discuss this and say, you know what, like maybe we need to move the goalpost back a little bit because we had a kind of statistical outlier, unpredictable type of sell-off. One that's not typical of financial markets where they are within the cycle, quote unquote. So we'll make some minor adjustments. Now let's talk about Doge, right? So Doge is it's the Bitcoin of meme coins. Doge is the most important beta asset because, I mean, for one, looking at this chart, we have Doge up top and we have ETH down below. Doge is older than Ethereum. I mean, Doge is like the OG beta asset, right? When things get frothy, Doge goes crazy, all right? Proof of work network, time tested, has many cycles, predictable high time frame price action. I mean, it's like Bitcoin, but with a funny name, okay? So let's look at when Doge really starts to rally here, okay? And the reason we're focused on Doge is because our other meme assets and beta assets are not going to move until Doge moves, right? So here's Doge's previous all-time high. And then we'll also look at Ethereum, which again, over here, ETH was like $20, but nonetheless, still important. Doge really started to rally right when ETH went into price discovery. Take this example with a grain of salt because ETH was only $20. It didn't have much price action yet, but nonetheless, still important. Still a cycle. It counts. Over here, ETH goes into price discovery, marked by the vertical line. Doge starts ripping, right? How about the last cycle? Let's mark out. Oops. Hit the wrong button. Okay. Last cycle. Doge, previous all-time high. Ethereum, previous all-time high. And you can see pretty clearly when Doge started to go crazy. And this is in log mode. This is how the chart actually looks, okay? I just put it in log mode so you can see it because that's how crazy Doge went. You literally can't even see, you can't even do analysis on it. That's how crazy it went. So when we look at this, we'll mark it out with a new vertical line here. Similar to the first cycle, when Doge goes on a ripper, it lines up perfectly with ETH going into price discovery. Happened in the first cycle, happened in the last cycle. And let's take a look forward at where we're at right now. So here's Doge, previous all-time high, last cycle. As you can see, we're still well underneath it. Ethereum, slightly leading from a structural perspective right now. So as you can see, ETH makes a new all-time high first, and then Doge shortly after starts ripping. Same thing happened in the first cycle. ETH goes into price discovery. Shortly after, Doge goes into price discovery. So when you look at this picture as a whole, you can say, all right, we got pushed back at least a quarter, but maybe 2 quarters. Okay, so we're really not that far off track. We're just behind a little bit, and there's a decent catalyst to justify it, okay? ETH is not in price discovery yet. It did make a very slight new all-time high. It wicked above and then sold back off. We're just kind of chopping underneath right now. Okay. But I think if ETH can manage to actually curl up and make a new all-time high, not a sweep, but like get up into price discovery, you're going to see Doge start to rip and rip really quickly. And Doge doesn't wait. When Doge goes, it goes and it doesn't look back. Okay. So I think there's a pretty good argument to make for one, Ethereum going into price discovery maybe this month, but I would say at the latest sometime very early Q4. And again, it's September 1, Q4 starts in 30 days, okay? Q4 is typically, from a seasonal perspective, the most bullish. But again, if we go back here, we already went over the example of when ETHBTC really starts rallying. Here's Doge again right here. You can see, I'll just move this up again. Doge really starts performing well when ETHBTC is ripping. So this is just another way to look at what I was just explaining to you guys. When ETHBTC, so meaning ETH starts outperforming Bitcoin, which is really ETH and price discovery, Doge starts ramping. Same thing happened last cycle. ETH starts moving up against Bitcoin. Doge starts ramping. ETH really just started moving up against Bitcoin. Because, again, we have this delay here. I would say that we're at least a quarter behind, but maybe 2. Okay, we don't need to be super specific, but we really just started moving here. So I think either like this month, if we don't sell off, we'll have to wait and see. Or at minimum, Q4, which again starts in 30 days. You should really start to see things ramp up in a big way, unless this cycle is broken and materially different. Okay. Because ETH going into price discovery is typically that trigger for Doge, and Doge is typically that trigger for beta, okay? Now, a lot of people have been saying to me, like, oh, Max, you're so big on Pepe. You've been in Pepe since, like, over here. You talk about it all the time. ETH has been moving up, but Pepe has not joined it. I tweeted out this example recently, but I want to talk about how this is actually a very healthy relationship and not one that you should be afraid of. And I'll show you the one you should actually be afraid of. So ETH is the alpha, Pepe is the beta. For over a year, Pepe was outperforming Ethereum. If you look at the Pepe ETH pair, if you look at the structure, which we'll do right here, it's very obvious what was happening. And it was nice. We all enjoyed it, but it actually was a cap on Pepe, okay? Because the alpha being Ethereum and Pepe is, it's on ETH, it's ETH beta, its price action is very dependent on the Ethereum ecosystem perking up. ETH not joining Pepe in, the upside volatility or structural upside was actually a major headwind on Pepe. That's why it was never able to break out. And it's why Pepe has been in a range literally since March of last year. It's like a year and a half, guys. So let's go over these little phases here. And I'm going to show you why this is healthy. And then we're going to go over some of the unhealthy price action that we've seen that at the time was fun, but was not great. So phase 1, ETH launches off the floor, right? So they both correct. ETH launches off the floor as the alpha. Pepe launches off the floor. They launch together. Next phase, ETH starts moving up aggressively. Put this in blue. And Pepe's moving down, right? You can see this very clearly. ETH is moving higher. And at that same time, Pepe, the beta, is moving lower, right? Then the next phase towards, whenever ETH is getting ready to cool off a little bit or towards the end of a rally, then you start to see the rotation into beta. And then you see dramatic outperformance of beta versus alpha. And again, this is in log mode. This is really how the chart looked, okay? I mean, you can't even see it. Like this thing, it ripped like 10x in like a month and a half, okay? But I'll just keep it in log mode so you can even see it. But this is healthy. They launch off the floor together. Alpha moves up, creates a bunch of runway for beta. And then one day we start to see Pepe rip. It's, You know, you can't exactly pinpoint exactly why one day is different than the next, but it just is. Let's look at what we're doing right now. They launch off the floor together. This in purple. And then ETH starts moving up aggressively, just like this. And you can see, just like early last year, ETH moving up, Pepe moving down. Sentiment's terrible. Everybody's fudding it. It's dead. It's not moving. Blah, 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 blah. ETH is simply creating runway right now. That's all that's happening. And at some point, whether it's October 1st, whether it's tomorrow, I don't know. One day will be different than the next. ETH will move up into price discovery, and Pepe is going to dramatically outperform to the upside, just like over here. Okay, it's the exact same thing. Purple, they launch together off the floor. Blue, ETH moves up, creating runway for beta. On-chain wealth is created. And then you see a monster rotation into beta. That's coming, and it's coming soon. All right. Now let's go over the unhealthy price action, right? Because everybody likes when Pepe outperforms ETH, but I don't think many people truly understand or recognize the dynamic that needs to be in place for a markup. I'm not talking about little spurts of outperformance. I'm talking about the big markup, because we don't want Pepe to just move up to here, and then sell back off. We need Pepe to break out of this range that it's been in forever. Okay. And I'm going to show you the difference between the healthy price action that we're seeing right now, which requires some patience, and the unhealthy price action that we've seen over the past year. Okay. So let me remove these drawings and I'll show you what I'm talking about. So let's go over the past year and a half's worth of, I would argue, unhealthy price action that capped Pepe, kept it from breaking out. Okay. So let's look at this as an example. Okay. Both of them sold off here and we're launching. Okay. So we'll just put this in like purple. Okay. Here's purple. They were both ranging. Pepe kind of outperformed it during this range, as you can see. Like one prime example of kind of unhealthy outperformance is, we had this market structure break to the upside here from beta, while alpha did not get above that high, right? No market structure break here. So that was different, right? But we'll just kind of look at it more high time frame. Pepe launches, makes a new all-time high, right? This was the previous all-time high right here. It's not really a cycle, but we'll just delete that. So previous all-time high. ETH moves up at the same time that Pepe does, right? They move together. However, why this was so unhealthy was that ETH didn't go on into price discovery. I guess it technically kind of wicked, but really it didn't go up as much as Pepe. From a structural standpoint, Pepe way, way, way outperformed ETH, right? Put these in linear mode. You see the difference here? So ETH kind of wicked, but that doesn't really count. Pepe was well above the previous all-time high. So because ETH didn't join Pepe and didn't create that runway, it capped what Pepe was possible of, right? It needed, if Pepe was going to continue to rally here, it would have needed ETH to move up in a big way. It would have needed, ETH up in here, and then you would have probably seen Pepe ramp as well. But ETH didn't join in the party, right? Not even close. And on top of that, here's another prime example of, this was unhealthy. What we saw over here from this low, which was created in April, was Pepe moved up and created a higher low, right? Held up structurally better than ETH. But over here, from this April low, Ethereum, the alpha, created a lower low. This is another example of, yes, at the time, it's fun. We like when Pepe outperforms, but it's kind of a death sentence, right? You need your alpha outperforming your beta to create that runway because people ultimately rotate their Ethereum into Ethereum beta and ETH tokens for that outperformance. So when people are holding ETH and the Ethereum ecosystem is struggling, there is less on-chain liquidity and froth to rotate into beta for trades like Pepe. It's really simple. So again, referring back to the first example I gave, what we're seeing right now is materially different over here and over here than what we've seen in the past on these failed rallies. And this is another example. So this was a little bit more higher time frame. I'll give another example right here. Ethereum and Pepe. Pepe makes a new all-time high over here, and ETH doesn't join in the fun. See that? Ethereum doesn't make a new high, where Pepe does. And then look at what happens to Pepe. Loses steam, sells off because ETH didn't join in the party. That's unhealthy. That caps price. Same thing that we just saw over here, right? But what we saw over here was the opposite. This is the big rally. This is the one that we're chasing again. This is what we want to see, which is Ethereum moving higher and Pepe moving lower. And then one day the rotation happens. You can't really explain what the difference is, but this is ultimately what we want to see, which again is Pepe coiling, selling off, while ETH is moving higher. You are going to see a huge rotation into Pepe. I can't tell you exactly when. I love speculating on it. I love saying we're going to pump. The truth is nobody knows exactly when it's going to happen, but I do recognize the signs that are screaming at me that this is an incredibly healthy dynamic that we're seeing right now. Not one that you should be afraid of. You should be looking at this going, okay, if Pepe is not dead, which it's not, on-chain wallet health is premier. Every major centralized exchange and large market maker has their interests completely aligned. Like, the setup is perfect. This ETH move is creating runway for a major rotation into Pepe, very similar to what happened in Q1 of last year. Pepe selling off, ETH moving higher. One day you're going to wake up, Pepe's going to start launching, it's not going to look back. This is the unhealthy part, when Pepe outperforms and ETH doesn't join in the fun. Right now, ETH is outperforming and Pepe's not joining in the fun yet, but it's going to. So anyways, that rotation extends well beyond just Pepe and ETH. When ETH moves up into new highs, whether we get a little correction here in September or not, it doesn't really matter. The on-chain wealth effect is going to be huge. It's going to be a tidal wave, right? And of course, the big difference this time around is that we actually have ETHBTC outperforming, right? We're starting to see ETHBTC perk up here. Let's look at Pepe. So let me adjust the y-axis here a little bit. The big thing to remember here is that Ethereum performing well against Bitcoin is a major tailwind for beta. We already went over the Doge example. Pepe down below ETHBTC. Pepe ripped a 10x in a month while ETHBTC was selling off. Pepe ripped a 10x in 40 days when ETH was underperforming Bitcoin. This time around, you are going to have Pepe ripping while ETH is actually outperforming Bitcoin. You're finally going to have the conditions that are primed for a run to multi-deca-billion-dollar valuations. You did not have it the first time. I explained why. Because ETH was not structurally performing like it needed to inhibit a run from Pepe. ETH was making, it was struggling to break out, couldn't make new highs. It was stuffed at 4K. Pepe was trying to move higher, but kept getting stuffed because there was no on-chain runway created by Ethereum, its alpha, to inhibit a run like that. This time around, things should be different. This one should be the breakout that really sticks the landing. You have ETHBTC running. You are later stage in the cycle. We're probably, going to rally into early next year because of, again, the delay. And a reminder, Pepe accomplished everything that it has in suboptimal conditions. ETH, the alpha, underperforming, and ETHBTC, which is our on-chain, risk barometer, literally nuking. So this is an opportunity. This is a huge, huge arbitrage opportunity, a huge catch-up trade opportunity. I cannot tell you the exact date it's going to happen, but I recognize the signs. You buy the blood, you buy the FUD, you buy the fear, you buy the slow bleed while the alpha's outperforming. You buy the beta slow bleed while alpha's outperforming, and you just wait, and you wait for the pop. It will happen. It will be glorious. It will be powerful. People will chase it. You have a small window here to position before the chasing begins. But anyways, guys, that is it for today. Hopefully you enjoyed the video. That was a long one. Thanks for tuning in. We will see you guys tomorrow on Market Check, and I will see you here for another 10-minute max. This one was over 40 minutes 1 week from today. Everybody have a great day. Stay safe and take care.